What's up, guys? Welcome to another recap of your S&P 500, your SPY. I'm just gonna go over the chart from Friday. Today's Monday. I actually did not trade on Friday. I was actually traveling, but I did want to just point out a couple things to notice. And this is again for beginners, for people trying to understand how to learn how to read charts. Friday we had an overall green day. We opened up here around 389, and it looks like when we ended up closing, we actually ended up closing above the high of Wednesday. That on itself is actually a very bullish indicator, and the reason for that is because you managed to end up closing outside of this engulfing candle right here. And if you go to take a look at it, the high of that Wednesday was at this red line, right? And I said until the market can either close above this red line or below this pink line, we're really not going to know what the direction of the market is. And so what ended up happening was we opened up the market between kind of like these two lines, and these were the lines that I ended up drawing from last Wednesday. And these are the lines where I showed you guys like, hey, there was bounces, there was pivot points throughout the day, and so they were actually somewhat applicable on Thursday. But going back to Friday, just taking at the daily look at the daily, we opened up right below the gray. On first bounce, it should have been resistance, but since it actually gapped very close to it, it was basically the market's way of telling us that, hey, we actually want to try testing out and open around this level. So that on its face is not very strong support or resistance. Um, so it opened up around here. It opened up a little bit above opening bell within the first minute or so. This ended up just pushing through. It looks like if you were to zoom in a little bit, there was actually some sellers and they pushed price all the way below this, but there was enough buyers here that ended up pushing this right above it, and it pretty much ended up being support the rest of the day. You can see that it actually came to test down one more time, and this was actually where you want to get in when you're playing these. And the reason is because um, the first time will always be the best time for something to get a bounce where you expect it to get a bounce. So, for example, if you get a bounce and this is a 1 minute chart, so what I would do is I would maybe try putting the bounce here, like buying a call here. Maybe try to exit if you get if if the price goes below 389.71. So you're only risking about 30 cents, but I would say look to cash out around this green line, which is 390.92. So you're risking 30 cents, but you're looking to gain about 90 cents. So it's about a 3-to-1 margin, right? So what I would do is I would get some calls, and as soon as it hits this, you should expect a rejection. And the fact that you didn't was actually one of the reasons why you ended up seeing such a follow through as well as an acceleration to the upside. So this would have been a nice, very, very nice bounce play. Takes 5 minutes, takes 1, 2, 3, 4, 5. And then I would take maybe half profits here. And then, as you see it go up, put some trailing stop losses, put a stop if it comes to hit below this, because you should expect that once it breaks through on the next bounce at this green line, it should be support. And again, we see it trading above the channel. You see this double top made. This was the first high of the day. So that was going to be resistance. And then we saw, it come to try and test it again. And it looks like here got rejected. And this was actually, where you got your resistance. So we'll go ahead and add a line here, just to keep an eye out for tomorrow when the market opens. And like I said, this on the first trial is going to be support, right? This technically counts as a bounce because if it comes short and it actually bounces away, it means that it virtually did a test of the number. And if it comes to do a test again, it means that it's not going to be as strong support. And what that kind of goes to show is that this, the second time it actually came very close to this number. And when I mean close, I mean like this line was at 390.93, right? This low was at 390.97. And then, you look at the low values here, 390.97. There's only about 3 to 4 cent difference. And so that's kind of a wash in the big scheme of things. And so, you know, this is where you would go short if it breaks through. However, since you're in a strong uptrend, you're much better off looking to go long than you are to go short. Um, and in fact, if you look at, again, if we zoom in and we see what happened at this minute, if you look at the volume, you got a huge volume spike where you got 500,000 shares. Where the minute before you're only getting about you know 22,000 or 20,000 shares per second, but this one you ended up getting about half a million. And that kind of just goes to show that it was very, that this number was important because as soon as it broke through, you saw a big acceleration to the downside. Now, I see that there is kind of a doji candle, and this tells me that this was bought up at this level, the 390.63. Let's take a look at what might have happened at the 390.63 to show us that it was important. And it looks like it makes about the top range of what this was traded in the morning before it made its big move up. Again, nothing significant, but when you get these long tails where you get a big sell off and a big buy up, this usually tells us that this is a kind of an important point. And I wouldn't be surprised if tomorrow we get to see kind of a bounce, off this level if it does come up. But again, just to continue on, it broke through, accelerated to the downside. It caught a bottom and actually started getting bought back up. And it's back to consolidating around the number, right? It's back to consolidating around the number. Um, what would have normally happened is, since you ended up catching, the high and it started consolidating around here, you would have expected this to continue its next leg down. Um, but it looks like it actually ended up breaking through. Here was, and the market was indecisive for a little bit, and at the end of the day, the buyers ended up overtaking the sellers, and a lot of the sellers who tried shorting once this broke down, or who tried shorting here, they're on the clock. They're saying that, what, like, price should have gone pushed down, but it didn't. So they start abandoning the positions, they start buying back in, and they push price higher and higher. And at the end of the day, when you saw this break right here, again, look, you see a big spike in volume, and it's shorts closing their positions, and that's why you get this very quick parabolic move up. And at the end of the day, this was the high that they needed to break. They came, and again, when they spiked it through, they did it with volume, and that's actually a very, very strong close. So as of now, we're back on an uptrend. The futures are actually looking green right now. One last thing we should probably look at is, we see that there's a little consolidation area, a little area where you saw buyers and sellers for a second. They couldn't make up their mind, and then the shorts ended up folding after this level, and that's why you end up seeing, like, those big green candles on volume. So let's look at this range of 391.90. If we're to zoom out, are we going to see this number play out anywhere else? And if it does, it's kind of a hint that it might be important on 391.70. Okay, so maybe not. At this point, we're kind of guessing, but one thing that I want you guys to start seeing is that a lot of these numbers is that they play patterns. They come to get tested time and time again. Um, Sometimes, when you make all-time highs, um, is there a known resistance point? No, not really. That resistance point is kind of calculated at the point where there's more sellers and buyers, and then once that equilibrium switches over to the seller side, that kind of creates a virtual pivot number to look at. So today, again, when we're making highs, this was a point of the day where there was more sellers and buyers to push price down. And so on the second go, this was going to be resistance. In order to get above, higher numbers, they had to break the high of the day. So, here they did it. You could have actually taken this for a short if you wanted to. Look to get out around this screen number, and then risk maybe, up to this red line. But it wouldn't have been fair, because again, you're betting against an uptrend, and how they say the trend is your friend until the end, right? You always want to go with the trend. You want to buy at. It's better to buy at strong support and resistance points than it is to points, pivot points that are not as well established, right? So this, this uh, this gray line has been tested over and over again, for the past 3 days. So you can probably figure out that this line is going to be much more stronger than, this purple line, and this red line is probably going to be more important, than other lines. So, just keep an eye out on that. We'll see what happens Monday. I'm gonna leave the lines on for now in case we have a big red day. But if it's a big, if it's a big green day and we're pushing new highs, um, whenever that's when you want to play double tops and double bottoms. So as you make a high and as the market pulls back, if it's a significant enough pullback, that's going to be a very strong pivot number. And on the second try, you should try and short it, because the odds are in your favor. But again, you don't want to be looking to short all that often, especially in a very bullish trend. And that's it for today. If you have any questions, just drop a like or comment, and then I'll try to get back to you.